Okay, good afternoon, everybody. This is Gary with Gary's Traders Group. It is Monday, September the 22nd, a little after 4 p.m. in the afternoon. Welcome, everybody, new as well as old. Let's get through the disclaimer here real quick. This webinar is for educational purposes only. I'm not a licensed representative or giving any trading advice. Trading does involve risk, so do consult with whoever you have to before you make a trading decision. These webinars are to educate you and inform you and help and aid you in decision-making processes. All right, let's bring up the macro picture first. Everybody see the screen okay? Yep. Yes, no, yes, no. Okay. We had a pullback this week, we reached a new high last week, both in the Dow, the S&P, and the NASDAQ. We have some volatility going on. I think last week was a lot due to the Feds speaking and Yellen speaking on Wednesday, and that made the market move in a positive direction because the DPO never changed. It never broke, and it's still on its downward cycle from being way overbought on all three indices. So, and as I had described earlier, if you look at historically on best choice, what does the market typically do between now and the end of the month? It typically goes down. So I expect this pattern to continue. I think the market ended up pretty strongly down. 106 points down. And the NASDAQ finished 52 points down. So I fully expect this trend to continue towards the end of the month. Again, it's a give or take a few days here and there, and fundamental news can always change it like it did last week. But historically, this market moves down this time of the year, so I do expect that trend to continue. And these are the numbers where it could retrace to 1710 on the Dow, 1992 on the NASDAQ. It actually finished down real close to that, 1994, and we still about 60 points off on the Dow. And it busted through the 23.6 retracement on the NASDAQ, so the next stop would be down to about 44.86 level. If we break through the 1992 level on the S&P, we're looking at 1975. And then if we break through the 17,110 level on the Dow, then we're looking at around 69.5. So these, again, this trend I do expect. I don't see any real changes other than the fundamental news that moved the market last week. So I expect this trend to continue downwards towards the end of the month. Let's take a look at the VIX. As you can see a big jump in the VIX from right down here at 11 all the way up to peaking at 13, almost 14 today. Again, had some resistance at the 50% level. The SPYs have busted through and closed below the 23.6 level at 99.15, and this is 99.12. I mean, it's almost exactly at that. So once again, you can see the evidence of the market moving lower. Again, the DPO never changed. It did fluctuate here with the VIX, but the VIX will be a lot more volatile with the ebb and flow of the overall market. Okay, let's take a look at the short-term picture and see what economic news we have to look forward to this week. We had new existing home sales come out today, and it was a disappointment. And the latest disappointment of our housing sector, existing home sales fell back 1.8% in August. So not real good news for that. What we do have is the new home sales coming out on Wednesday. We have economic news of durable goods, jobless claims on Thursday, as well as the GDP coming out and the consumer sentiment from the University of Michigan. Things to be aware of, things to keep your eyes on, and check this in the morning if you forget to see what's going on if you're looking to make a trade, because that's going to move the market. It's going to move the market. Rarely is it built in. Usually there is some kind of hiccup movement either the upside or downside. So be aware of these things when you are looking to make some trades. Okay, one of the things I want to go right into is support and resistance. For example, let's take a look at an ETF called FAS, which is the financial bolt. It's 3 times movement, which is, by the way, a historical short right now through Best Choice, and I'll bring that up. But one of the members asked me to discuss support and resistance. And if you go to Investopedia or Wikipedia and you look at the definitions, what you end up determining from all of that is that it is more of an art than it is a science. It's more of a visual recognition of charting. For example, on this particular chart, if I went to drawings and a price level, I can visually see 3 times the price tried to break this area, which was a resistance area originally, and it never did. It went once, twice, 3 times, you're a loser, as the song says, and then it crashed. Came down below linear regression and then pulled up, but busted through here. Now this area becomes support. So when this pulls down, there'll be some resistance at this 104.3 level, about 104 on the FAS. So that is one thing that's just visual that you can see. You can see support level at this level here. You can also box things. Is another technique people use to determine support and resistance. You can see that this is a box area, and again, if this was to be support and this was resistance, you change the color, of course. If it goes through either one of those, then it becomes the inverse of what it originally was. Support becomes resistance, or resistance becomes support. So there is no necessary definitive method of determining, mathematical method, not that I could necessarily determine, from determining what is actual support and what is actual resistance. Again, this is not an exact science. So it's more of a visual recognition of looking at charting and seeing where support is and where resistance is. Like this is pretty definitive that you can make out. Now, the other technique, of course, that can be used, which I use a lot rather than try to eyeball things, is I like to use Fibonacci extensions or retracements as a level of support or resistance. Okay? And from Thinkorswim, you simply go to Drawings, click on Retracement. Depending on what time period, I like 6 months usually. And you simply click on the low and then drag it to the high and click on it. It doesn't have to be exact, and let go. I mean, you can click on the actual line and click Edit Properties if you want to get real exact, but it's usually within pennies. This is 112.70, 112.83, so it wouldn't make that much of a difference. Again, it's an approximation more than an exact science, but these things once again become support and resistance. As you see, this level is not in there. The reason is more than likely is that I've removed on the Fibonacci, I've removed the 23.6. If I click that and apply it, as well as the 78.78, because these aren't very common areas. Usually price will bust through that. But you can see this is now, let me get rid of this price line support level that I drew in. You can see where price is hitting down here and bouncing off of this 23.6. So that's acting as a support level. And if it goes through that, I'll use 38. So generally speaking, I will not use 23.6 or 78.6 as targets of price retracement or extension. I'll use the default 38, 250, and 61. Many people use a 50% retracement as a target, as a support, as a place where a security may retrace to if it's in an overbought area. Now, if a stock is sitting at the top of linear regression, let's keep these on here, and I'm going to hide that drawing. Let me give you another example here. A company called UTHR. It's a United Therapeutics. Some interesting things have happened with this stock, and I want you guys to keep this on your watch list as a short, especially if this market continues to tank like this. The reason is they won a lawsuit against Sandoz Pharmaceuticals that tried to come out with a generic for their what is it called? Remodulin. I wrote it down. Remodulin products. And on this day here, the judge awarded in favor of United Therapeutics, and that's why this stock exploded. But generally, you see, there wasn't a lot of movement over 6 months. And interestingly, if you go to choice and you look at what does the stock historically do, it has a pretty decent pullback between September and October. I mean, not a high probability. I think it's like 80%. But there is that probability. Here, let me do best rating. I think it comes out blue instead of purple. There it is, 5.82. Now, what's interesting, though, when you look at this statistic here with best choice, kind of technique you guys can use also to kind of help verify things or what am I thinking of? If you're confirming something, disconfirm. If you click on 2013, where was the stock in its historical lowest and highest on Best Choice's composite chart? Well, it was down in this area, okay, when it went up and lost, in other words, that year. That wasn't a year you could have shorted it. Okay, where was it in 2010? Well, again, it was down in this area, being way oversold, pulling back up from this area to here. So the 2 years that it missed, it was below the 50% of its historical movement. Now let's look at 2012. Well, it was up here when it pulled back. Let's look at 2011. Well, 2011 is different. It was way at the 20% and pulled back. But the 2 years that it did lose, and I think I looked at 2009, it was sitting up here. 2008, it was sitting up here. And so when you look at 2014, it's also sitting way up here. Let's face it, stocks don't go to the sky. This move that's happened was strictly a fundamental result news. Now, it's saying there's a 90% probability based on the hash marks that it's going to continue to go up tomorrow. There's a lot of buying on. There's a lot of happy news. But this thing will retrace. I mean, this is, I think it's historical high. Yeah, it's as high as it's ever been. So, this stock will pull back, in other words. It is overbought. So I think there's some shorting opportunity here. So keep your eye on it. Wait for a doji to happen. That's usually the best indication. I mean a serious doji. That's not a doji in my opinion. Okay? But I'm talking about an indecision of a doji where it's pretty much looks like a star. And then from that point, you could pretty much look at what are your, what are your puts and what is the cost. Buy a little bit of time on it so you can buy some time. So I looked at that and put that actually down as a potential short that you guys can look at. Again, this is it'll fluctuate based on how this thing continues to move. As I've always said, these trades that I look at, I'm always looking at the day before. There seems to be a lot of October short interest here at the 105s compared to any long interest. I think a lot of people are saying, yeah, this thing is overbought as well. And you can pick that up for relatively inexpensive at the 105s. I'd rather not spend I'm sorry, yeah, it's, I don't know, what's the 60 cents would be the mark on that. I mean, you could actually go out and get to a delta of 20, which is what I'd normally do. But on this particular one, I'd rather go cheap. And this will increase if this stock collapses hard. And I'm buying enough time into October where it shouldn't. Again, I wouldn't make the trade until I see some confirmation of a doji or something turning in my favor. So that's one interesting one at the 105. The other I would try, I would do the, what did I put down? November 115. Oh, I put the Novembers as a bear right here. I see a lot of action in this area. As you see, there's a today volume alone was 115. Again, there's other people that use this technique of volume of call and put interest to determine where the security is going to be moving. This is a common technique that's used. And I've always looked at that. And of course, I'll look at what does historical movement mean. But this would be, this is based on a fundamental event that took place that shot the stock way up. As you see, I already did fibs on this, but that was as of what I thought was a doji, which was yesterday. But it blew right through that. So I would have to change this, change the date to the 22nd and change the price to 34.19 to give myself a more accurate reflection of where it could potentially retrace to. So there's that 115 and there's the 110 at 50%. And 61.8, which is a very common turnaround, is literally almost 50% of this large candle, which is very, very interesting. When you look at 104 versus I put my cursor on that candle, and if you look at the top left up here of what the low was, it was 90. The high was 118. So that's 28 points difference. Half of 28 is 14. 14 plus 90 puts you right at about 105, 104, which is exactly where this is at right here. So again, just give yourself a signal here. One of the signals I see here is the DPO. Now, one of the members on this webinar, Bob, I've worked with him to set up his charts identical to mine, and he sees the power behind, and it's not 100%, but it's very, very good in its accurate reflection between a DPO, a MOBO, and a PPS trigger. So, and the hull turning over, this hull that is tweaked. So again, anybody that's looking for this, wants this think script, I'll be glad to email it. I think a couple of people have asked that. So look for that as a potential short. Once again, I looked at the November buying a bear put spread on this. And guys, that's cheap. $1.30 for a $5 spread gives you a lot of opportunity to make money, and you're buying time. So I think that's a potentially a good short. I'm going to be candid with all of you. I spent a good part of 2 days looking for longs, and I came up with a big goose egg. I cannot find any decent long trades between now and the end of the month from a best choice seasonal perspective. Sure, I could go to, trying to find fundamental news, but that's not really what this webinar is all about. It's using best choice as a foundation from a seasonality perspective to find us trades, and then using technical analysis to help confirm, and using open interest and volume to see, and the mathematics behind how I was taught to use best choice. So I found no longs. So I'm not going to spend a lot of time today on this webinar. I'm going to talk about a couple of other things here. I'm going to go through the shorts that I did find, but I want anybody who's on this webinar to please chat in at any time that you want of any symbols you want me to look at, specifically if they're long. Fair enough, everybody? Okay. So UTHR is one, and I had to actually go, and I've run tons and tons of lists here. I've run all sorts of cycles, like I did one just yesterday using basic parameters. And, of course, this is no longer traded. This is an ETF. TBT is an ETF. TMV is an ETF. VC is an ETF. I believe AWI is an ETF. I think it is. I'm pretty sure it is. No, Armstrong World Industries, it's not. But again, I haven't heard of this company, guys. And then when I go to, let's go to potential longs here that I did. As you see the start dates? They're all the beginning of the month. R now no longer exists, and then all of these are at the end of the month for longs. This is an ETF, this is an ETF. EDC is way at the end of the month, and it's an ETF as well. So, one person says, it looks like it's time to go to cash. Guys, I'm telling you, this market is fickle right now. You're seeing tremendous volatility. This is not untypical for this time of the year. I'm going to repeat in showing everybody historical perspective from a Dow Jones Industrial. 76% probability that it goes down. NASDAQ perspective, you can't really get a pick. It's 61% out of 31 years. So, you could say 10 years, that statistic is actually higher. Asterisk SPX, again, you have I believe a 61% probability out of 44 years that the S&P goes down. And I mean, I could look at the SPYs. It gives you 10 years of history in that same area. It's a 60% probability. So, the odds are for the market to go down. You could get some hiccups along the way, some fundamental news. So it's a risky time to make trades one way or the other. I would rather be on the short side. And I know none of you really like to do that. I have learned and forced myself to do that. If I do, I don't take a lot of positions, and I'm doing very inexpensive options. I don't go in my normal dollar allocation or contract allocation. Most people here, I think, when they are trading, they're trading and allocating a certain amount of money, not necessarily a certain amount of contracts, because we all have a certain amount of money to work with. And proper money management and proper position sizing is really dictated by how much cash you're putting on the table per trade. Some people put 500, some people 200, some people 1,000. Again, it all really depends on the size of your account. So I will normally scale back if I'm shorting on my positions from what I normally would do as far as cash allocation. So one of the other shorts I was looking at was an ETF called TMV, which popped up. And I, by the way, put a conglomeration of ETFs, largest by volume and largest by asset. And it's quite a few. And then I ran it through the Cycle Wizard to see what would pop up. And again, you see the same ones popping up at the end of the month to go long, but it's literally at the end. So it's really beginning of October. And pretty much the shorts, we're looking at TVT, FAS, PFF, and TZA. So the other one is, of course, the VIX, which when you look at this thing and you look at where is it at right now, it's still, it's popping up. So I wouldn't short this thing now. If anything, this thing is probably going to go up. If it crosses the 200, then more likely it's going, or the 50, I'm sorry, if it crosses the 50, more likely it's going to pull up. Again, this is herky-jerky time. I guess I can't say much about that other than that. But TMV was one that I looked at from ETF standpoint on a short side. Does it show up here, TMV? Maybe it's not under volume. It's probably under asset. No, it's not. It's not under asset class. I don't know where I got this from. May have been through one of the cycles. In any case, it's 5 out of 5, but one of the things that stood out to me, folks, is I love to see this. I love to see tremendous consistency in percentage movement from year to year. Point movement is great, but we know that the security changes prices over time, and especially the further back you go, usually the lower the price of the security. So I love to see that kind of consistency. So where's TMV right now? Well, it's sitting way up here. Got a MACD that's pulling over. Got a lot of negative volume today, crossed over the 20-day moving average. So that's an unusual amount of negative volume that's coming in, meaning selling. Again, on UTHR, look for something like that. Let me bring this into a 3-month. See, that's the kind of doji you want to see on UTHR. And that would almost be a day I would go in, actually. I would do that. Some people would need some more confirmation, like a negative candle the next day, because really a doji is an indecision between the bulls and the bears. They fought, nobody won. The next day dictates which way the trend of the stock is going to go. So you may want to wait for confirmation on UTHR that that's what's happening. Anyways, overbought, sitting at the top of the extreme, pulling back. If you go to linear regression, it shows it's at the 92.4 extreme. If we go to an option chain, for TMV, what did I put down for TMV? October 40s. October 40s. And I think I did that. Let me pull up a chart. I'm pretty sure, there it is. Yeah, that's the retracement back to its low right here is what I did. I went from the high to the low, and it ran up to the 61.8 and then pretty much bounced off as on its way down. One more day, we got a DPO turn on. We already have a PPS and a MOBO breakdown. Remember, this MOBO, this is just Bollinger Bands, folks. The difference with this is that they added a detrending price oscillator, a very powerful tool that reacts quicker than the MACD, as I shared with people. So if we go to a little bit shorter time frame so you can see this better, you could see it just bounced off the 38.2. So, you can add in, if you want to, the, what I could do is reverse this so you guys can well, actually, that's what I just did. I want to do it the other way. Well, it doesn't matter because this would be a retracement up, so you really want to do it from here to here because this is coming back. And bottom line is they're identical, just flipped. This is 0 versus this being 100. So the right way to do it would be from the low to the high. But the 40 would be the retracement. Now, if you want, you can put in the 76, as I said, point. See, that's omitting as a target. I can say, okay, where's it going to go to? Well, maybe I should be more conservative and choose the 42s. Okay, what do the 42s cost? Well, they're pretty inexpensive, but not a lot of action, folks, until you get into November. And I think November, is this all? Okay, November is $5 increments, but you have more in the money. So a bear put spread is $1.90 for $5 spread. Again, inexpensive, good money to be made on that. And then you already got some intrinsic value, not much, 30 cents. ETFs are tricky, folks. They're not, once they move, and you can make a lot of money. I may readjust TMV because TMV was something that I put down as the OC 40s, and I'm trying to look at why. Well, I probably saw some volume there, as well as I saw the retracement coming back to here at 100%. And of course, it's all trending down. If you look at TBT, it's the same pretty much from an ETF standpoint. It's the ultra short. Again, this is Alice in Wonderland. This thing goes up if the market goes down. It goes down if the market goes up. So this is a short. So technically this thing should be overbought, which it is. And it almost looks exactly, again, what this is treasuries, folks. TBT and TMV have to do with bonds and treasuries. I want you to put some thought into this. If the market starts collapsing or people get nervous, one of our members said, looks like we should go to cash. Well, the big institutions, instead of going to cash, they're going to buy more treasuries and bonds, right? And so the ones that make money off the inverse of those are going to go down, and that's exactly what these are. So that all makes sense that if people hoard towards that, this is going to lose money because this only makes money when those go down. And if people move their money into treasuries and bonds because the market is going down, then this thing will continue to go down, and that's how you're going to make money. Did that make sense to everybody? Somebody respond with a yes or no. I'll wait for an answer. Okay. Well, Bob, think of it this way. You said if you should go to cash because of this volatility. Okay. What's similar that is less volatile to the market, where people scramble to for safe haven? When the market goes down, everybody moves their money to bonds and treasuries. Why? They don't react to the market as much. They're safer. They're government-backed. They're insulated from the ups and downs where securities are not. When people are feeling better about the market, they move their money out of treasuries and bonds and move it into securities because they feel more confident and they can make more money because the market's more rosy. So people move their money to safer haven in treasuries and bonds. But these things only make money. That means more money is going into safe haven. So those things typically will go up. These are inverse of that. They only go up if those treasuries and bonds go down, if people are pulling money out of them and into equities. I know it's a little bit of Alice in Wonderland, but that's what it is. So if you need more clarification on that, give me a call and we can talk about that. So those are the TMV, TBT, and UTHR. The last one is, from an ETF standpoint, is FAS. And once again, sitting way up here, above 90% of its historical movement. You can see how this pulls down, this pulls down. You look in various years, you see how it pulls down. There's 12, pulls down right here. So this area right here, if I can get it, you have to go to best profit. There it is. It's 5 out of 5 years. Again, decent point and pretty consistent point moving, except the anomaly here in 2011, where that pull down represented actually a 19% move. So if you wanted to be more conservative, which I know I used to not do this, and remember, I don't even recommend it. Don't form fit. Don't throw, these big. If this was 39, I'd throw it out, and then just average those as an average percent move to use that as a multiplication factor to find what my target price would potentially be of where the security could go to. But in this case, I wouldn't. I'd just keep everything in. It's a pretty big move, and it also hit there, and now we have a purple hash mark indicating a 90% probability that's the direction it's going to go. You look at volume and open interest on FAS. You see a lot of action. You see some people here. When I say a lot, maybe it was a different one I was thinking of. You see some people loading up in October here. There is something that's indicative that people are, again, these people are buying some time, right? Going way out of the money at the 95s. They're spending some money, but they're being insulated from the ups and downs potentially of what could happen with these, because these things can be herky-jerky as well. So let's look at some charts at FAS. And there's your 50% retracement at a 97. 94, 93 would be 61. I put something a little bit more conservative as 100. And I think I put AUK 100s. Yeah, and that's actually where all the open interest is compared to other than this at 105s, which, you know, you could be even more conservative and buy that. It's still not that expensive in premium wise to security. I mean, 280, paying $2.80 would represent a 2% premium, and 420 would represent a 3% premium. So, you know, you're paying about a 2%, a little bit more than 2% premium at this level, and you've got a delta of 39, which means, but you got to subtract 7 of theta, so really your net is 32 cents per dollar movement this goes down today. These, of course, will change tomorrow. I also put an AUK 110, 105. Yeah, I did a 110, 105, and for 226. So buy the 110s, which gives you almost $3 of intrinsic value, and sell the 105s with the idea that it's going to continue to go down. Those 105s will become worthless, and these 110s will continue to grow, 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 grow. And you get to make the difference between what you paid and the $5 spread. So there's more than enough in there to be able to make 100% profit on your money. So that's that. All right, and those are the only things. Oh, there's only one earnings trade that I want you guys to keep your eye on this week, and it is coming out Thursday after market. And I think it's a very strong company. I think they have a great presence in China and expanding, and that's Nike. It is a 90% historical. Let's go to best profit. Well, 89 point, so 8 out of 9 years here. You know, it missed that year in all reality. That was the one year it missed, but every other year it's gone up. So let's take a look at open interest and volume on this. What did I put? I looked at October. Now I did this on Sunday. Well, see, it's moved down $1.10, so that actually I put the 8250 Octobers. This one right here, which is what, less than $2 away, right? And if I expect the historical 6.95 average move based on best rating a whole zone, best profit per trade, you know, that starts like right at the dots and moves forwards is 3.41. 6.95, but this is running up to and busting through. I'd be probably more conservative and say, there's 7 there. I mean, there's 4 here with an 80%. I mean, you could do that as well. And my gosh, guys, that's a 90% all the way to the end of the year, where you got from 09 to 13, 12, 19, 9, 11, 12. But you're going to deal with some whipsaw through that. So, but at the same time, if you're buying time with an earnings trade, you will not get beat up as bad if it goes against you. Which again, I see that the propensity of open interest is on the bullish side, even though there is some people shorting too. Here's 51 comp, 5100 and 4800 in ACH. You go to November, really there's no excitement in November whatsoever, right? Let's go to January now. January is a different picture. You have a lot on the call side and a lot on the short side. So there's some uncertainty out there. When you have this kind of disparity between decisions and leaning towards one side or the other, kind of tells you the consumer also really doesn't know. Statistically and everything I read, though, about Nike is that they're doing well. You're not risking a lot here. Again, if you spend $1.25, buy a couple of contracts for $2.50, it's not going to break the bank if it goes against you. And if it goes in our favor and it goes up $2, which, based on an $80, a 3% move is $2.40 that puts you in the money. That's just a 3% move, and I expect it to do better than that, just from 3.41. So that's the only earnings trade. I also did a bull call spread, but I did this, and this is something you may want to entertain instead of doing the ACH spot month for $1.25. I looked and did the January 80.85s. 80. Yeah, $2.14. I still like it. So it's giving you a little bit of intrinsic. It was a lot more when I did it yesterday. It was $1.81, almost $2 of intrinsic, but it's still inexpensive. Okay, so that's all I have is what I could find for you guys. I went through support and resistance that somebody asked. Kirk, you're on this call today. I see you there. You had emailed me some questions about splits, and I gave you instructions of how to fix your charts. Did that work successfully for you? You can type it in the chat box of a yes or no. Oh, okay. Jose brings up a point about Nike. The World Cup was this year for Nike, so that probably bodes well for them as a potential earnings trade as well. I guess Kirk has stepped away, but that's okay. Perhaps hear that later. What else? You guys asked me to look at, Yahoo. I'm not going to listen to Mr. Macbeth anymore. Actually, he called it right. He just told me too late. Yahoo was a trade, actually, and if we were smart folks, we would have played that run-up of anticipation to the Alibaba IPO and not played it with, because this is a classic buy the rumor, sell the news. So I'm out of that. That was a loser. I didn't get a lot of it anyways. What else did you guys want me to look at? Apple. All right, Apple's pulled back a little bit, but literally 99% of the market has pulled back because of today. And especially the NASDAQ moving 52 points. But it's still on its upward trend, and if you look at that blue line, which is a 20 SMA, it's acting as support right now. We do have a turned hull, but DPO is sideways. You see, it hasn't pulled below midline. Hasn't pulled up yet. It tried to here, but we've had a little bit of pullback. If you look at seasonally from Apple, there is a 60% probability that it could pull back. One of the things I always like to do is hit the puzzle piece, folks, and see that change the charts. So now I got a 70% probability of a 3.86% move. Where is it sitting at this year? Well, sitting way up there. So, you know, you may want to take some positions off the table if you're in it on a long. Wait for it to retrace a little bit. It has had a really nice run. It is sitting at the bottom, though, of linear regression, which is actually a good thing. Sitting at the 8.4, which is really saying that it's oversold and telling you it could go up. But, you know, you got to be careful of historical. And see, that's the thing I'd be a little concerned about. We've had a nice run up here, you know, from $91 up to 103. There's been a little bit of sell-off here from the 103 down to the 97, rode back up. It really, what's starting to happen is there's some consolidation happening here. And you can see a pendant starting to form. For example, if I threw in here under indicators, trend lines, and got rid of these MAs because otherwise it becomes too messy. You'll be able to see that exactly what I'm talking about right there. And that's like a flag forming or a pendant forming. So, and again, you can, speaking about that, folks, one of the new additions to Thinkorswim is pattern recognition on charts, which is kind of cool. You just click that and you can select patterns. You can select the classic triangles, channels, descending, blah, 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 all these different ones, inverse head and shoulders, or candlesticks. And you could just add all and then click apply, and it'll show any of these things. Okay? I don't want to get into it now, but I just wanted to show you there's that new possibility. You can pick out the most common ones instead of ones that you really don't know anything about. You know, concealing baby shallow. I mean, that's not one that I look for. You know, dark cloud cover, I look for dojis, evening star, morning stars, you know, these kind of things, bullish, bearish, engulfing, something I look for. But anyways, I wanted to show you that's available. The other thing that you can do if you're looking for trades is, and you use Thinkorswim, I'm assuming most people do, is when you go to profit, I think Pfizer, if you see that box, everybody see that? That box indicates a bearish engulfing pattern sitting at the top of linear regression after a big run up with a trigger and almost a MACD trigger. How I find these things is when you go to patterns, find candle patterns, click on patterns. I've checked the ones I want to look for, which is bullish kicking, engulfing, bearish kicking, and bearish engulfing. There's only one patterns I wanted to find. And you simply click apply. Then when you do that, it'll search through all the litany of securities. And then under candlestick patterns, there are all the patterns based on my criteria that I wanted to find. And one of them, of course, was Pfizer that I clicked on, and there it is. And I found these all the day I was doing it, which was the 19th. 18th, 19th. In other words, I did it over the weekend, and that's what was showing, even though I did it on Sunday. So now what you can do is go to best choice, put in the particular symbol, and see what it does historically. And this didn't confirm things for me. If anything, this was a non-confirmation that it was going to pull back. So that didn't really give me a lot of confidence to show it to you guys and say, wow, you know, this looks like a trade where historically could pull down. And from a technical aspect, there's a bearish engulfing, and it's at the top of linear regression. So, but it's a technique that you can use very simply. Let the Thinkorswim software find you potential trades to look at. You know, now some of these I would never trade. This was one I was looking at, bearish engulfing again at the top of the channel. And again, if would have made the decision on Friday when this popped, yeah, thing went all the way from 37 down to whatever it closed at today. It was down 40 cents. But ALTR, oh, that was a good one, yeah. Sorry, it was one I was going to put down. Had a 70. Do you know what? What I didn't like is that it was 70%. And I don't show you guys 70% trades. That's best profit per trade. If I did best rating, it doesn't. I'm sorry, it's a 90%er. Hello. So ALTR, let's put that down. ALTR. That's a put. Let's take a look at, and that's a 5.96% move. ALTR, October. Oh, that's what I didn't like when I looked at it. Look at the bullish moves on, or the bullish interest on that versus bearish. I said, whoa, what am I missing here? So then I'll go to the next month, and I see this kind of bullish interest with almost no bearish interest. I think that's the reason I didn't put it down. And here I had tremendous bullish interest in the money. I had some more bearish interest out here, but nothing in the spot month that gave me the confidence to say, well, yeah, even though if you go to charts on this, Bob, you may like that because you see there's a bearish engulfing right there with a PPS trigger, and it closed below the 10. We have a DPO that's already busted through. It never broke through, so it's overbought, pulling down. It's overbought, pulling down. If you were trading just technically, it would be a setup for a short, and I would do pretty close to the money. Either that, or you could take the historical. Oh, then you could say, well, where is it in comparison to a historical movement? Sitting way up there. I'm going to put it down as a put on the sheet, and you guys make a decision what you want to do. Okay, last thing I want to show you guys as far as hunting and finding trades, if you can't find them through BCS, is got to go to live money. My watch, my quotes. Green candle low, and this is something, Bob, that you asked for. Is there a way to scan for these indicators? I only know of one way to scan, and that's for a mobile breakout or a mobile breakdown. And I've got the scripts, and I can show you how to create this. And you can put it on any list of securities that you want. I don't know what I have this on. Maybe it's my main stock list. I don't know. These are probably my main stock list that I look at. Yeah, I think it is. And so wherever you see a 1, like the comp, which is the S&P or the NASDAQ, you can right-click the dot, go to toss, and pull up the chart. And sure enough, there's the breakdown with the PPS today on the NASDAQ, and you would have seen that off the breakdown. And there's more that you can look at all the way down into here for solar. Now keep in mind this formula is based on a close in 10, which means it's a 10-day. It looks at close and 10 days back. That's the length of what it's looking at to find the mobile breakdown or mobile breakout. It's based on a length of 10, okay, with a 0.8 standard deviation on both sides. So keep that in mind. It won't always show as a trigger for that specific day. In other words, just like with First Solar, the breakdown was here, but that's 1, 2, 3, 4, 5, 6 days back. So it's within the time frame. Generally, though, you'll find that this works pretty accurately as far as, what is this, BG? Oh, no, it's this one here. Oh, Baidu. Yep, there's a breakdown on Baidu today. And what does Baidu historically do? Baidu historically, can't find it with best profit or best rating, so you don't have that high of a probability, 77.78, that it goes down. Let's hit the puzzle piece just to make sure we've got good data. Yep. So not great probability. Somebody asked also to look at, they came with the new phone this week. Oh yeah, the i6 for Apple. Yes, that's right, Jose. Apple came out with the new phone. And there should be some excitement about it. So I think the pullback here, that historically, I'd still be a little careful, because when I see this kind of consolidation, one of two things happens. If you put your hand right here and you put another hand here and you decided to work your pec muscles and squeeze together, so you're going to squeeze that and something's going to come popping out here. The key is, which way is it going to go? So if you look up definitions of a flag and a pendant, that's not a positive sign. It's a negative sign. Even though the release from a fundamental standpoint, Jose, you're correct, that's a real positive for Apple, and I guess the demand for these i6s is through the roof. I mean, it's been a tremendous recognition, but a lot of competition is coming in for Apple between Samsung and its relationships with Facebook and, Google. And, Apple is still extremely strong, and they really have separated themselves from the rest of the pack as far as innovation goes. They don't try to piggyback on somebody else's to, better somebody else's technology. So they're a real innovator in that regards. If it was my money, I would remove some from the table just to play it cautious. Even though it's overbought and, the thing continues to climb. Let me do something here real quick. Okay, let's do this with Apple. And again, if you want to know, see, I've got a very strong, this is a different chart that I use. This is a 4989 EMA. And these are floor trader moving averages that are used very, very regularly. And when price stays above that 49, you stay bullish. And you can see how it comes down and touches, goes back up, touches, goes back up. It's called a leashing effect. People in the bond market, mortgage market use this as well. You know, it's kind of like walking the dog on a leash that's, you know, one of those new ones that lets expand out and then only goes so far, and then you clicks it and then the dog comes back. And that's kind of like what's happening here. The dog meandered out, then came back, meandered out and came back. It's called a leashing effect. What I wanted to do though is extensions. Here to here to here. Jose, this is a technique to use of where Apple potentially can continue to go to. You go from the low to the high. Actually, that's wrong. Let me remove that. I needed to go to close. So you go from the low to the high to the close. So 108 and 112 would be the next benchmarks, I guess. And if you think about 108, that's kind of, you know, you got 104 and 110 here with the linear regression. So if you want to stay bullish, that would be your next targets. Okay. Somebody brings up, Bob brings up VMC. With a breakdown. And I do have a 40, and that's another thing. When the 49 crosses the 89, that's generally indicative that that is going to be the direction. I see a lot of going meandering sideways. This is called threading the needle, right? If this was the needle, this was the thread, threading up, down, up, down. It's threading the needle. You do not trade in this kind of scenario. You stay away. You know, because you got a breakdown here, Bob. You got a bust up here. You got a breakdown here. You got 1, 2, 3, 4. You see, that's threading the needle. 1, 2, 3, even on a DPO. Now, if I had something significant that told me from a seasonal standpoint, VMC may go down, I may be more apt to short it. Let's load this up. End of September. Well, here there is a 70% chance in October that it goes down. 80% in October. I don't know what kind of volume or interest this particular security has. Well, there's an anomaly, folks, right there. That's a telltale sign that somebody knows what's going on. People loaded up today on 15 times open interest. And that's what loaded up on the short side. So that's pretty inexpensive at the 57.5s. Well, let's see where the 78.6 is. It's at the 60. I'd probably want to buy some time on this, though. I don't know what November looks like. So there's a lot more bullish interest in November, and I don't have a Jan. I got a lot of bullish interest in Feb, though. From a technical perspective, from a short term, you're not risking a lot at 35 cents. And Bob, this is a good find, but it's too herky-jerky and threading the needle for me to say, yeah, this would be a trigger for me to short, because this is in the middle. If it was overbought up here, And even then, this isn't overbought. This is just past the 50 midline, you know. In other words, this kind of triggers what you really, really are looking for. Something that's either oversold or overbought. This happens to be oversold. You have a PPS that triggers at the same time the DPO triggers, and then the MOBO triggers, then you're off to the races. But the stock was oversold. This is right in the middle. Even though it's trending technically down, I'd be too leery of that trade to execute it. Okay, any stocks you guys want me to look at? No? All right, guys, I'm going to wrap it up. There wasn't a lot to be found today, but again, you may want to go to cash on the sidelines. I do believe things are going to be bearish here, so I did come up with some bearish trades, but always pay attention to the market. All right, we'll talk to you guys next week, and great trading.